All right, daily bias. So, this is probably going to be one of the most important videos of this whole course. Daily bias is disclaimer. Daily bias took me about a year to not even master, but get good at. I've not mastered daily bias at all. Um, I think my best tip before I actually get started on daily bias is there's going to be days where you're not going to know the daily bias, and my second best tip is you're not going to need to use the daily chart for daily bias. You can use the hourly chart for daily bias, and you can use the 4 hour chart for daily bias. Um, just because it's called daily bias does not mean you need to use the daily. Now, I wouldn't use like the 15-minute or 5 minute for daily bias, but I mean you could use like the 1 hour or maybe the 4 hour. But anything below the hourly is pushing it. All right, so I primarily use inversion fair value gaps on the 1 hour or 4 hour to give me the daily bias. That's the main thing I look for. Okay, and I only use the daily chart for an actual daily bias if we're inside something really obvious. So, um, to explain that a little bit more, like right now in the daily, as you can see, there's too many fair value gaps here. There's a fair value gap here. There's a fair value gap here. There's just too many. So what I'll do is I'll go to the weekly, and on the weekly there's only one. Okay, there's a small one right here, but I mean it probably won't matter that much because it's just so small, and this is the main one. Now, this one, would you long this if it was on the 1 minute? Probably not, because from a liquidity standpoint, remember what I talked about in the fair value gap and liquidity video? Would it make sense to bounce from this fair value gap, or would it make sense to fill this fair value gap? It would make sense to fill this fair value gap because we're just so high. We're trading way above in a premium area. Okay, so from this to this, we're way up in premium in the weekly. So it's very high. I would not long it if I was on the 1 minute chart. All right, does that make sense? So that's imperative to understand. So because the daily is too many fair value gaps, we would use the weekly. And this is where I'm going to get my bias. Now, do I have a bias yet? No. My bias is created off of conditions, meaning when we are inside the obvious daily or weekly spot, okay, which keep in mind, last week, were we in an obvious spot? No. We didn't. I mean, I didn't have a weekly bias. My bias last week was no long because we were too high. That was it. My bias was do not long, we were too high. That was my bias. And it's gonna be like that sometimes. But was this in an obvious area? Not really. Now, to get more advanced, we actually were in an obvious area. Okay, if you look at with B-Edge turn on, we were inside a bearish fair value gap to the left. So again, my bias was do not long last week because we were in a obvious fair value gap. I wanted to see how we were going to react to it. And now what you kind of do here, like if you're a swing trader, you wait for one or two things. You wait for either this obvious fair value gap to get closed above. Okay, if it gets closed above, I would expect the high to hit up here, or you wait for this fair value gap to get closed under. So if the candle closes under it, then I would expect this low to get right here, because it's the next intermediate term low inside a fair value gap. As I talk about, it's like my favorite liquidity pool. Now remember, does a intermediate term low inside a fair value gap matter? Is that going to be the drawn liquidity every single time? No, we need to see some sort of momentum, some sort of violation going towards that low, and then it's going to be the draw. So unless this weekly fair value gap gets violated, then this won't be the draw. So again, we're in a really nice spot in the weekly because we're in between two obvious fair value gaps. We're just waiting for one to break, and that's how we're going to get our bias. Now, sometimes we might not be in between anything. For example, these two candles right here, we're not really in between anything. I mean, here we knew the bias was bullish because of this, but let me show you guys this, for example. But like maybe here, you might not know the bias at all. Okay, so there will be times you don't know the weekly bias. There will be times where we'll have a couple candles in the same spot and there will be no daily bias. Okay, like here's a great one right here. This is just, there's not really daily bias here. We just kind of chop around. But when we are inside those obvious areas, that's where you're going to find your daily bias or weekly bias to be the best. Now, if we're trading the 5 minute or 1 minute inversions, does this really matter? Not really, because we're not swing traders. I really only recommend using the weekly or even daily if you're a swing trader. And because we're not like fully swing traders, I don't really use these. Now, if you're a swing trader, definitely use these, okay? Like what I will do is if we close beneath this fair value gap, what I'll probably do is I'll probably scale into some SQQQ, meaning I'm betting the market's gonna go down, and those are common shares, and I'll probably sell them all here. But that's only because we're in an obvious spot, and that's how I'm getting my bias. But remember, if we're not in an obvious spot on the weekly, will I use the weekly for bias? Nope. I'll go to the daily. Okay, and right now the daily, just there's too many fair value gaps here to use, so I probably won't use the daily here. What I will use though is I'll check the 4 hour and I'll check like the 1 hour. So the last couple days have been pretty easy, okay, and I'll explain why. So I use my 4 hour to get the daily bias for two reasons. One is because you don't need, like, there's going to only be like 4 hour candles in a day, and it's much easier to predict the 4 hour candles using inversions than using the daily, because a lot of times the daily does not have a clear inversion. The 4 hours where the inversions are formed. Okay, so for example, I've been bearish the last few days. Okay, it's because of one thing. It's because there's a very obvious fair value gap here. Okay, we broke through it with decent amount of momentum. So we have this giant candle, and then we have this red candle, and we kind of broke through it. So where do I think the market's gonna go after we break an obvious fair value gap like that? Well, the next liquidity pools, equal lows, intermediate term lows or highs inside fair value gaps, data lows maybe that we might have left over, relative equal lows, or maybe some LR. Those are the 5 main ones I use. So in this example, you can see we have an intermediate term low, okay, an old low inside a fair value gap, which I talked about before. Inside, again, I talk about this in the basic session, so I would watch the liquidity video in the basic section if you haven't. So again, I just be targeting this, okay? And then where else could a target be? Well, if we go down more, there's another intermediate term low, which is also an abnormal wick, which I will be targeting next. So you can see I'm forming the daily bias. I don't need the daily candle to know that. The daily candle doesn't even show these lows here. But the 4 hour is nice because it actually shows these lows, so it's a little easier. And that's where I'm getting my daily bias from. So hopefully you understand that, but all I do is I look for really obvious inversions on like the 4 hour and the 1 hour. So on this, we can clearly see we displace above this high, did not really displace too much above it. We kind of just displace a little bit over it. And if you do my little range method, how I measure the range, you can see if we draw the range that we just broke, we kind of broke this range. Okay, so from this low to this high, we move this up. Did we break more than 50%? No. So because of that, this would not be a good long when we retrace, because we barely displaced above the previous range, and we need to displace above it more than 0.50. Okay. So now that we understand that, and we're in an obvious weekly fair value gap, I'm literally just waiting until I see whatever, like a siren or buzzer to go off my head, which might mean, what might make like a buzzer or siren go off in my head? Well, I'm waiting for some sort of major displacement or some sort of obvious inversion. So I would consider this the obvious inversion and this the obvious displacement. So we kind of have both here. The other inversion I would have liked was this one right here, because you can see price test it and then we hit bias and we go through it. However, the candle was just way too far of a close to even use this one. We already hit liquidity at that point, so I couldn't really use this one. So then I started waiting for this one. I was like, okay, well, if this is violated, I'm going to be bearish. And we get the violation, okay, right here. And where does price go to the next day? We go to this low, and then you can see price is still continuing down to this next intermediate term low. So again, you can see I'm waiting for the 1 hour and 4 hour inversions. Another thing you can do is wait for the 1 hour inversion. So if I'm bearish, or I don't know the bias, I'm going to wait for any 1 hour inversion I see. So I'm going to just mark out every single fair value gap here, okay? So we got this one. Price never retest it. We got this one. Price breaks above it. But here's the thing. Based off my time video, what time do we close above it? We close above it at 4 o'clock. You really think I care about the market at 4 o'clock? Absolutely not. I don't care about the market at 4 o'clock. I don't care what it's doing. Okay, so I wake up in the next morning, or we wake up during London, or some of you guys, and you can see during London, we now inverse this. Okay, we inverse the bullish fair value gap. So you have a bearish one we didn't care about because it was not during a good time. And we have a bullish one we clearly inversed because you can see the candle closes under it. And this is London session. And London session respects this beautifully. So what does this typically mean? That typically means, okay, if London session is respecting a inversion fair value gap, we are headed to the next low. So using that ideology, this one was an easy bias because this is the only inversion we got. It's a bullish inversion. Even if you thought we were bullish here, like even if you thought we are going to bounce from this for some reason, we'd never get a bearish inversion that's broken here anyways, besides this one. But this wasn't during a good time. The only inversion we get was this one, and you can see it's closed under, and then it's retested during London session, and London was still holding it, and then we go to the low. Okay, our next one was here, which price never retest. Our next one was here, which price does retest, and we do get a short from it. And then the next inversion was here. And this worked beautifully. You can see price closes below it, we retest it, and then where does price go? Back to the low. So you can see the only 4 hourly fair value gap, only 4 hourly fair value gaps on this chart were all used in some way. If it's a really, really, really tiny one, I don't worry about it too much. Like if it's a really tiny one, I don't really worry about it. But if it's obvious, I'll use it. Again, and then you can also see this one as well. But this one, what was wrong with this one? This one, we formed this fair value gap before the London kill zone actually began, which is fine. But the problem with this one was from the previous day, we actually already swept sell side. And yes, I understand there's more sell side beneath. But you have to be very careful with, especially in London session where there's much volume, there's much less volume than New York. You have to be very careful of shorting this low. Like if you're looking for a bullish inversion to get disrespected, you want to see more of a retracement. You want to see more of a liquidity sweep on any time frame. And if I go to this time frame, we didn't really get any major liquidity sweep here. So if I just go to this right here, actually it's more above. Not sure why there wasn't enough data there. So let me just go back to here. Okay. Okay. So this, it's not letting me go back for some reason. I have no idea why. Let me just go to 5 minute here. Okay, there we go. So this was the hourly fair value gap. Okay, this was the hourly fair value gap. Do we get any major liquidity sweep even in the 5 minute here? No, we don't really go above any of these old highs. We just keep creating lower highs. We create LR, and then we just dump. And that's why, like, that's why you're not going to see a good inversion here. Okay, I know it's during London, but it's very low. You're not getting any liquidity sweeps. Okay, so that one wouldn't really be ideal. Now, if I X out and look at this one, why was this one much better? Okay, well, this one is better because if I go to like the 5 minute and we look at that one from all day, we got a really nice liquidity sweep when retesting it on the 5 minute. So here's us retesting on the hourly, but in the 5 minute, we got a really nice liquidity sweep, and then price ends up respecting it. So it's a little more advanced, okay, and this is not going to come easy. Like I said, you will not understand this right away. But make sure, like, if you are shorting an inversion super low when you know the bias is bearish, make sure we are getting liquidity sweeps in the lower time frame, or else the higher time frame one probably will not work, okay? So again, you're going to see that's how I form my bias. So any inversion I see, I just kind of mark out. I see the reaction from it. The hourly is really nice today. It does not have to be an inversion as well. I mean, again, this was just super nice here. This is really obvious for like up in the 4 hour. Okay, and what does price do? We close under it. Price retested it all day, and then finally, boom, rejection from it. Okay, so that's one way to do it. Okay, and I just look for the really, really obvious Fair value gap, we're in, or either we reject. So I'll start looking for long here, but if we don't get any long setups and we violate it, then I'll obviously look for the short. And again, we might not have these, okay? Let's say like tomorrow's candles like this. Let's say all of tomorrow's candles like this. I'm still going to be bearish, but is there anything telling me that we're going to go up tomorrow? No. I mean, until we hit this low, it's really hard to be it's hard to be bullish because we're in the middle of nowhere. We're not really delivering off of anything meaningful. And I know some people might say, oh, but this is a CE of a wick. Okay, I prefer if it's a fair value gap. Okay, I prefer deliveries off of fair value gaps, or I prefer some sort of order block formed. Okay, order blocks is another thing I'm going to talk about, looking for daily bias, which you do not get a ton, but when you get an order block, that can also tell you the bias as well. So that's a little bit about that. Okay, let me go to the next slide. So regarding this again, I only use the daily chart if we're inside of a weekly or daily FVG or an order block, and then I'll look for a reaction from it. Okay, and not every day that's gonna be the case. You're gonna have days where you're not in anything. And if you're scalping, you don't really need the daily bias. I mean, you can look for 15-minute inversions and 5-minute inversions and scalp off the 1 minute. But if you know what the daily bias is, that's how you catch these big moves. That's how you're gonna get these really good risk rewards and hold runner. So don't underestimate that. Okay, so when we're inside the hourly or 4-hour fair value gap, okay, the lower time frame is what's going to tell you if we're going to respect it or not the higher time frame. So if we're in an hourly fair value gap that's bearish and we get a 5-minute bullish fair value gap that the market violates, okay, we will probably be bearish. Okay, so in this example up here, this is a great example from a couple weeks ago. I think this was 2 weeks ago. We had a very obvious inversion here, okay? Now, initially, people think we're going to reject this, and that's fine. But remember, the higher time frame is not telling us if we're bearish or not. It's the lower time frame. So if I just go back to this and go to the 5-minute, okay, I'm just going to look for a New York session only. So we have a New York session here. We do get a short setup here. However, is it valid? No, you're going to learn this based off of how I teach my inversions later in the course. But this inversion hit this internal low first. Therefore, this is not a valid inversion because we hit the internal low, then come back up. Other than that, I don't really see a good short setup. There's too much liquidity up here that wasn't taken. There was no manipulation leg that was good. I mean, there was this. However, we didn't really manipulate over the higher time frame. So I don't like this as the 2022 model. And the other thing is we don't get any inversion set up to the downside. Every single bullish fair value gap we put in here and every single bullish order block like here, okay, you can see this is a bullish order block. This is also another chain to say delivery here. Okay, so these down candles that take out this liquidity, which I talked about in my order block video. Got an order block here. All of these are just nothing's bearish about it. Okay, you need to see some sort of order block get violated that's very obvious, or some sort of bullish fair value gap to get violated that's just very bullish and it's just violated. We don't really see that too much. Even in this situation, we form a bunch of fair value gaps going up here. We got our last one that was formed here, and price never violates the last one. So it's really hard to be bearish here. And then if we keep going, this was actually overnight. We keep going, London session, we don't get any violation of anything. I mean, this is pretty obvious to me. We don't really violate this at all. Okay, so price doesn't really violate this bullish fair value gap, so that's not bearish. Price doesn't even violate this fair value gap. That's not bearish. And the lower time frame is telling us that we're not going to get any short setups here. Like you can clearly see, there's no bearish market structure shift. There's no bearish anything. So even though the hourly looked bullish or bearish and it looked like we were going to reject it, was the lower time frame there really telling us we're going to reject it? No, not really. Okay, so it's just, that's very, very important to understand. Okay, the lower time frame for your entries will tell you if we're going to reject a higher time frame fair value gap, and it'll be pretty obvious. Okay, so obvious that like we'll get a bullish fair value gap that's super obvious, such as this one, and we'll just dump right through it. That's price telling us we want to be bearish, not the fact that we're just in like an old fair value gap that might not even matter anymore, if that makes sense. So that is what that bullet means. Okay. So, like I said, I only check the daily chart for bias if we're at an OB, a fair value gap on the daily or weekly. And a lot of times I will not check the daily if we're not in anything important. So this is just a markup of a chart where these are all obvious for value gaps in my opinion. I think I missed this one as well. But a lot of these are obvious, okay? This one is BPR. We have a CISD here. Okay, this is a order block I kind of go over in my order block video. And you're going to see, like, there's not really... There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. There's about 13, 14 spots here where we're in something really obvious. But other than that, it does not happen every single day, and you're going to have to realize that. So I didn't really go over how to, like, so obviously I look for CISDs as well. Other than fair value gaps, I do look for CISDs. So a live time example would actually be right now. There's actually a live time example playing out now. So we just put in a 4-hour order block actually. So we rejected this inversion, and you can see price closes below the screen candle, sandwiched between this red candle, this red candle. So we literally just put in OB. We just put in an order block right now. Well, what does this mean? This means that I'm probably right about us going to this low. Let's say I didn't know we were going to go to this low. Well, then this 4-hour order block that we just closed under, we closed on the body, is telling me we're probably going to go to this 4-hour low if I didn't know before. So if we get a really obvious order block on the 4-hour hourly, I'll also use that as well. And this is a pretty obvious one. I know the wick is relatively big here, but the bottom of the body looks pretty clean to me. And the fact that we closed below it and have an ITL over here is pretty textbook in my opinion. All right. Another CISD would be like this right here. So you can see we have 2 series of green candles sandwiched between this red candle and this red candle. We already took out the previous week high, and then we took out this high as well. And then price clearly closes below the last 2 up close candles. And when price closes back below that, that's your chain of state delivery. So that is something that's worth noting. Okay. And then we've put in another OB here, another series of green candles with a close below. However, this one we closed so far below. So the risk reward obviously sucks at that point. But if we get an obvious CASD or an order block in the 4-hour, you can also use that for bias. I love using them for bias. Like when I see like a 4-hour up close candle put in and I see us close below that 4-hour up close candle that's like kind of sandwiched between 2 red candles, I'm like, okay, well, that's an easy bias. I know we're going to go to the next low. So it's not just fair value gaps. And again, you're not going to fully learn daily bias just from this course. You are going to learn it from experience. Okay, I'm telling you that. It took me like over a year to just really understand, and I'm helping you guys accelerate the process by telling you just wait for the obvious order blocks, wait for the obvious fair value gap, see how we react to them. There's your daily bias. Wait for the obvious, or wait for a 1-hour, 4-hour inversion fair value gap. Okay. If I go to, so I'm going to go to actually FX Replay. I've already made a video on this on my YouTube, but if I go to FX Replay right now, let me see if I can log in real quick. If I go to FX Replay, I'm just going to wait for an obvious inversion to get triggered. So I'm going to go to the hourly here. Okay, so this would be it. So if we close below this without hitting this low, this would be the obvious inversion because we swept liquidity, and that would be an obvious inversion. So I'm just going to wait for that to happen. And I don't know the bias until that happens, okay? Okay, now we have a new one. We have a new one right here. So now I'm going to wait for this one to be closed under. Do I know the bias here yet? Nope. There we go. Now that was closed under, I now know the bias. So it maybe took a day to know the bias, but now I know the bias. I know we're going to go to this low. Okay, and it'll be really awkward if we don't. Okay, there it is. So we go to that low, and then you can see we go a little lower. We don't quite tap into this, but you can just see that's a really nice way to figure out daily bias. Just wait till an inversion is triggered. It might take a day. Honestly, this only took, this took about a day, I would say. So you're probably sleeping here or sleeping here. Then you woke up and you can see it inversed. And yeah, you can see we hit the next low. So that is you're going to have to wait for some of those to trigger. It's not going to be every day. Okay. So this is the hourly. Let's say go in the 4 hour. Now wait for 4 hour one. Okay. So the 4 hour, generally the same thing. I'll just be waiting for this 4 hour to inverse unless we see a new one. Okay. Okay, so here's a pretty obvious one. Now I'd be waiting for this to inverse. And then I know the bias is bearish. But until then, do I know the bias? Nope. There we go. And the problem with this one is this inversed and hit this at the same time. So can't really do anything about that. And then that was inversed and this low was finally hit. So you can see, like, waiting for these obvious inversions to trigger, that's mainly how I get my daily bias, okay? And it's not going to be every day, okay? You're going to have days where we're not in a situation like this, which is fine. You're just going to have to be in scalp mode on the lower time frame, which is perfectly fine. And then you can just see, drawing out the obvious fair value gap, where we probably got a short setup in on the lower time frame. This is where I always go. I'm like, okay, if we're inside of a 4 hour bearish fair value gap, we're going to go to the 5 minute and see if we get an obvious short setup in it. And you can see, indeed, we did right here. Okay. But again, if we don't get that obvious short like this right here, we don't get that obvious market structure shift, which would be right here. Okay. Then we're probably going to get a long setup. So you just have to watch and see what the market gives you inside of a major area. And I would consider this a major area. It's very obvious. It sticks right out to you. And that's just, it's so obvious to me. So that's kind of what I'm looking for. So here, I know daily bias is bullish to the next highs if we violate it or close above, because it's a clean singular bearish fair value gap. And this happened a few weeks ago. So just another key example where we're holding a fair value gap here. You don't necessarily know if this is going to reject or not. But then once we get the close above the obvious singular inversion, you're like, okay, well, now I know we're going to go to the highs, right? And that's what we're waiting for. But until that happens, you don't know the bias here. You don't know the bias of this candle. You don't know the bias of this candle. You're just kind of waiting. And then finally, this candle closes above, you know the bias, all right? So sometimes if there's not any obvious fair value gaps and we're kind of in the middle of nowhere, like I said, I just stay in scalp mode on the 1 or 5 minute time frame, and I'll just literally just camp and wait for equal lows to form that day. So if I go to like, if I go to the candles over here, I was just waiting for a short over here because I knew we were really high, but I didn't know when to get it. So what I did on like these days is I just went long, and if I did, it would always have to be some sort of equal lows or equal highs setup. So I just wait. I'd be like more mechanical. So let's see if I can find an example. So like right here, I knew we were high. We had relative equal lows here. They're not the perfect ones, but they're kind of relative equal. And we had an obvious inversion here. And although maybe I don't know the daily bias yet because we're so high, and I know we're so high and I don't want a long, it's still a setup. You can just take the here and that's your scalp, right? You don't need the whole for the daily bias. This is just a simple, there's relative equal lows here. We swap the short-term buy side, even though it's on the 1 minute chart and not the daily, it's still a setup. We inverse the fair value gap, and I did alert this a live time to my Discord as well. And you can see, like, this is just a classic setup where you don't need the daily bias for this. This is just relative equal lows. If I'm in scalp mode and I don't know the daily bias, this is all I'm waiting for. I'm just waiting for a sweep above a high, relative equal lows, and then an inversion. And that's all I wait for without knowing the daily bias. But if I do know the daily bias, I want to wait for the setup that goes along with the daily bias. But if you don't know the daily bias, then you can take a setup like the example I just showed. All right, so again, I draw the really obvious fair value gaps. And again, this is more of a hindsight thing. Like, drawing and waiting for the reaction out of these is more of a hindsight thing. Like, you don't know if we're going to bounce off it or reject it in live time unless there's like really obvious equal highs or equal lows. Well, then you probably know. But without obvious equal highs and equal lows, sometimes you have a hard time knowing if we're going to bounce or break these. And you just wait for the reaction. So like, I'll go to bed and I'll wake up and I'll see London respected some sort of fair value gap. So let's say I go to sleep and I go to sleep and we have this candle, and then I wake up 5 hours later and I see this, or I see this candle, okay, or I see this candle close above this inversion. Well, okay, I just took a nap. I wake up, I see an inversion activated. I now know the bias. And that's why I never try to figure out the bias before I go to bed, because half the time London forms a new fair value gap or a new reaction off of something, and I have a new bias for that day. Um, so that's like the hindsight part of it, where I'll wait for a reaction off fair value gap and then I'll figure out the bias. So like I'll sometimes I'll literally just take a nap and wait till we get better price action or better delivery or something like that. So here's an example of when there's 2 hourly fair value gaps. Okay, so if I ever see like 2 fair value gaps on the higher time frame next to each other, then I typically go to the higher time frame until there's a singular one. So this is the hourly and this is the 4 hour. So what I do is I just go to the 4 hour because it's the singular one, and I use this. Okay, I use the 4 hour bodies, 4 hour candles, 4 hour fair value gap. I don't use the 1 hour candles for a 4 hour fair value gap. You have to use whatever time frame you're on. So if I'm using the 4 hour inversion right here, you have to use the 4 hour bodies. Okay, a 1 hour closing above a 4 hour inversion does not make sense, because what if the 1 hour closes above the inversion, but the 4 hour candle doesn't close for another 2 hours, and then the 4 hour ends up coming all the way back down and price is really bearish? You don't want that to happen. So you need to wait for the same fair value gap, same time frame close. So here's another example. So this is a 1 minute time frame inside of a 1 hour bearish fair value gap. Okay. And what happened here was we were inside this fair value gap here, but is there any sign of price wanting to break structure here? Is there any sign of price wanting to be bearish here? No. So although it looks like this might be bearish, and although it looks like we might reject it, price on the lower time frame does not show that it wants to reject at all. At all. This is just nothing. Price does not look like it wants to reject. There's no bearish market structure. If you watched the video or read the sides of market structure, do you see an uptrend or a downtrend here? You see an uptrend. Okay, there's no break of structure. We're not breaking any lows that made a new high. It's very obvious that price does not want to reject this in the lower time frame. So summary of daily bias is this. My main goal for daily bias is this. I look for the obvious fair value gaps and OBs in the daily and weekly, and if it's not singular, I go to like the hourly or 4 hour for the obvious one. So an example of me doing that would actually be this. So on the hourly or on the daily, just as I showed you earlier, we have too many fair value gaps here. So what do? I just go to the weekly, and I'll end up swinging some shorts if the candle on the weekly closes below this. But do I know on the daily yet? Nope. I'm going to have to wait for the weekly for this one. Okay. And I'll wait for the reactions off of 1 hour, 4 hour normal fair value gaps, or I'll wait for the 1 hour / 4 hour inversions to trigger. So close above or below a 1 hour, 4 hour, or a reaction like a long setup or short setup out of a normal fair value gap. If we get it, I'll take it. Most times, if we are in the New York session and let's say we are in a bearish fair value gap, or let's say we like in this example, okay, let's say I don't know what's going to happen inside here. Let's say I'm just waiting for either confirmation long setup or just a short setup. Well, for the short setup, I'm waiting for it to be closed under. But what if you're looking for a long as well because you don't know which one's going to happen? Well, typically the market will not really give you a good long setup if that's the case. So we will typically not get a good long setup if that's the case, if the bias is truly bearish. And you don't really see a good long setup here. I know some people might argue this one is, but it's actually not, because we're delivering off of a bearish fair value gap here, and the wick respects it. So this would not be a good long setup in my opinion. So typically the market will not give you a long setup anyways if you are waiting for a long setup here. And then it doesn't give you a long setup, so you won't usually take the loss, and then we inverse it. So you'll take the win for inversing it, okay? Because you'll be waiting for either the confirmation long here, or you'll be waiting for a short, whichever one happens first. And this is only if you don't know the bias. If you're married to one bias here, like I was today, I was married short, you don't even try to look for a long setup here. You just either wait for this to be inversed, or if it's not inversed, you don't touch anything. Because if you're bearish bias, you are not, I don't care if you see the most textbook long setup in your life in here, you do not take it if you're bearish bias. But if you're neutral, you'll wait for either a textbook long setup out of here or you wait for it to be violated. Okay, but remember, if you have a bias and you are confident that there's maybe an ITL or something on the lower time or in the higher time frame, and you're confident, then again, you should not be even taking along if there's a setup here and you see it, right? Because you should be sticking with that bias. And again, some days we'll have nothing obvious, as I already mentioned. If that's the case, I'll just stay in the 1, 5, or 15, and I'll just look for equal highs and equal lows. And I'll just take setups to those. Simple as that. Or again, data highs or data lows, or intermediate term lows or intermediate term highs. I'll just usually wait for. And again, the reason why I'm efficient in finding daily bias is because I do not marry a single bias. I only do sometimes if it's really obvious. Like today, we had a really obvious momentum towards an intermediate term low, so I wasn't even looking long. But if we're in between, like just the middle of nowhere, for example, if we're really high or just in the middle of nowhere, like I'll just kind of wait. I'll just wait and I'll see what I see. Like in these few candles here, I'm not trying to, I mean, I know we're high in the range. I'm not really trying to long up here, but I'm not short bias yet either, because is there technically a short up here? No, there's not really a short up there until we finally get this big fair value gap reaction here. Okay. So like when I'm looking for daily bias up here, I'm just kind of neutral. I'll scalp both long and short until the higher time frame starts to break structure. Okay. So again, that's why, like, again, I would say half the days I trade, I don't know the daily bias, but I eventually figured out. The other 50% of the days, I will know the daily bias and I'll be confident, but there's 50% of days where I either won't know at all or I'll figure it out later in the day, okay, based on what we're getting in the lower time frame. So that's basically what I do. And to end this video, this is actually an example of a scalp I took because I was unsure of daily bias here, but we formed really nice intraday equal lows here. Okay, we formed nice intraday equal lows. And then I think this is the 1 minute or the 30-second, but on that chart, we delivered from a fair value gap here, and we had an obvious inversion. It was the last one left, and we had equal lows below. So what I did is when we closed below that, I saw, okay, well, the market closed below and didn't hit these equal lows. And I didn't want to enter the market close because the risk reward was bad here. So I waited for the retracement, and I got a little scalp here, which was a 2-to-1 R almost, which is still very good. So daily bias is not required for stuff like this, but patience is, because you will not, unless you can be patient enough to wait for a setup like this, you're not going to do well. So you can see this is just an example where maybe this doesn't require bias. Maybe I'm just looking for equal lows in the lower time frame, and that's what I use, and that's my play, right? You don't need a daily bias for that. So this is just another example of a play I took not using daily bias. You're probably gonna have to watch it back twice or 3 times, but just remember, daily bias will not come in a day. It would literally took me more than a year to kind of narrow this down into one kind of system, and this is what my system is. I wait for the obvious fair value gap or OB to form, and then that's my bias. And again, like I said, some days that will not be the case. Some days you will not know the bias. So that is it for this video. Your assignment for this video, I want you to forward test, which means in live time in the next like month or so, see if you can get the daily bias either using a fair value gap or CISD with form on the hourly, 4-hour, or daily, or using an inversion fair value gap, and keep track of 3 times and see how many times you can get the daily bias right. If we just end up chopping the whole day, that does not count. Just apply it to the next day if we still have not invalidated your whatever your condition is. Okay, maybe your condition is, oh, we're holding a 4-hour fair value gap, so I think we're going to dump. And then see how many times out of 3 times you can get the daily bias right based off what I taught you. But you have to wait for the obvious ones. If you don't wait for the obvious ones, you're just going to make it harder on yourself. So that's your assignment. So to complete this daily bias folder, what I'm going to do is I'm actually going to keep uploading videos actively, maybe like once every 2 weeks or maybe once every week into this course. Probably once every 2 weeks if I had to guess. And I'll upload videos and kind of go over how I'm finding the daily bias and what I'm using. And it's going to be very simple. Some days I'll show you the days where I didn't know the bias, and I'll show you the days where I did. and I'll show you guys how I found it. And it's probably going to be off of one of the things I talked about. So I'll do that as well for you guys who are going to keep actively checking this folder, because I'll keep adding to it. That's it for this video. See you in the next one.